So beyond the internal market, cross-border EU issues, I want to talk about beyond the capital market in Europe, and that's why our presentation is called the Capital Market Union Without Borders. And in fact, I see that today the byline or the title is Promoting European Dialogue. You should know that the Swiss Finance Council has a very ambitious byline, which is fostering international dialogue. So this is one dimension beyond. This is Olivier coming in. And in fact, my presentation is going to argue along the following lines. We need investments today in Europe from abroad to create jobs and growth. Third countries are not necessarily enemies. They can also be partners. And definitely, I think Swiss financial global banks see themselves as partners. The Capital Market Union has great potential, but it's going to take some time. And hence, the Commission has already said it's going to focus on some quick wins, and I'm going to offer, or try to offer, a quick win today. So let's go down. So Europe is highly integrated with the rest of the world. In fact, it's the most integrated market in the world. We have the most imports and the most exports in the world. So even though today, after the third speaker, we tend to feel a bit gloomy, I think the starting point that we have is actually quite positive. We have a good story to tell. And in addition, we're the top destination of foreign direct investment. And we ourselves also are number one in investing abroad. So the starting point isn't that bad, but we can, of course, do better, because what we do see is that since the crisis, internationally, there has been a decline in cross-border capital flows all over the world, but we're the worst in the class, so we have lost the most. And that's primarily to do with our over-reliance on bank lending and the lack of trust, which has severely affected cross-border lending in Europe. So cross-border lending inside Europe has diminished substantially, and hence we need to go cross-border in Europe again, but we also need cross-border from outside Europe. So we need to focus on that. And another negative statistic for us is that since 2008, at the very beginning, you can see the different countries. In fact, business investments have been relatively weak. The US has recovered the best, but when you look across all European member states, for once Germany is last, after Switzerland, France, and the UK. So Europe needs to get investment in business going again. We have a couple of things against us. One is, of course, a relatively shaky banking sector, excessive debt. We also have fewer alternative sources of funding when you compare to the US. And so, again, the point we're trying to make is that, yes, Europe needs business investment, and since our banks today are not able to deliver those, again, we need to look across borders to make that happen. And non-European partners can play a vital role in the region's recovery and development. These are two very interesting charts that we have taken from Eurostat, which shows that, in fact, our biggest partners in business are first the US, then Switzerland, in terms of the countries where they come from. And Switzerland in particular is quite important in terms of employment, simply because it's geographically in the middle of Europe and hence offers a lot of job opportunities. Now, with regard to the growth potential, I like in particular the last chart, which actually compares the European market and European capital market instruments with American capital market instruments. And here you see that there is a huge potential in terms of growth. So if we were as good as Europe, we would be the brown statistics, whereas today we're the blue. And in particular, we can maybe single out a couple of instruments that could be particularly interesting for Europe, which is the asset-backed securities and securitization market, as the Commission has already identified. But also the fourth column, which is IPOs, which is very, very important in terms of equity capital here again. Last but not least, investment-grade bonds, where again Europe can make some solid progress. But it is a long-term project because for those that have been around for some time, you probably remember the Financial Services Action Plan, which were already an effort by the European Commission to kickstart the internal market for capital market and financial services, which has probably helped us a lot in terms of progressing along the elimination of cross-border obstacles. Remember, that was before we had a common currency, so we have progress, but there are some very deep-seated barriers, and I think several of the speakers here today alluded to them, often linked to national member states, which say one thing when they're in Brussels and something else when they're back home. So, how can we make progress quickly? We are saying the capital market union without borders could be a quick win. Why could it be a quick win? Because a lot of the instruments that we have today are already there. We only need to develop them a little bit more. One is, of course, the regulatory dialogues, which have been, to some extent, informal. We believe that those are very valuable instruments, and if they could be institutionalized, it would be even better. So, base the institutional dialogue on the regulatory dialogues that are already existing. Help the EU to lead international and regional standards. We all know that it's very difficult sometimes for Europe to raise its voice internationally. Why? It's because Europe is such a strange multilateral animal that nobody recognizes it. And also, again, member states don't necessarily help Europe to speak in one voice. But still, it's a chance for Europe, and Europe should be leading on setting multinational standards. And then, last but not least, and that's one of the pet projects that we have been pushing, is a redesigned process for equivalence, because we really think that the equivalence process today needs to be looked at more systematically, and that could be an opportunity for this Commission, because we think it's relatively low-hanging fruit. It would be good for investment, it would be good for legal certainty, it would be good for the level playing field, it would be good for stability, and it would be good for international coherence. How could this look like? So this is a little brainstorming with my colleagues this week. And we sort of looked at the process of legislation, and we thought that actually at every step of the process, there are small things that one could do, and the Commission probably is already doing, but maybe not as systematically as it could be, where we could think international. For instance, when the Europe launches an EU consultation, it would be nice to always include the third country aspect, both in terms of import and in terms of export. Always try to base any third country recognition on IOSCO standard benchmarks. Have the EU consultation already on the financial regulatory dialogue. I know that the Commission has already talked to the US about the Capital Market Union. I think that's great because it gives a sense of direction. And then, last but not least, the Commission needs a stronger impact assessment arm than previously, especially to make sure that it doesn't capture entities, whether market participants or public authorities, outside of the geographic territory, which are actually not intended to be part of the regulation. So I think that capacity could be further enhanced. Now, at the second step, which is actually the most important step, again, we have some ambitious idea. I'm not sure whether they can hold, but I think it's worthwhile thinking about them. So we believe that when the Commission tables a proposal, it could, for instance, define the criteria on which it will judge the equivalent requests. I think some regulation and directives already do, but not systematically. So there could be a systematic sort of setting out of the criteria of what will be looked at, supervisory arrangement, soundness of the system, and so on. Then the Commission could also say, okay, once we have 120 countries that want to apply, here are the criteria that we will use to group countries to say, okay, this is the first group of countries, this is the second group of countries, and we will judge them on a number of things. For instance, Have those countries implemented the regulation line by line? Have we already tested their supervisory arrangement? Have there already a lot of equivalence decisions? Do they have strong economic links with Europe and the internal market? And then I think also what would be helpful would be to have a little bit more information of the method of equivalence. Ideally, of course, it would be better to have a principle-based system, but we also realize that if a country goes into a line-by-line translation of the EU laws, then to some extent it should be allowed to jump ahead of the queue to some extent. And then last but not least, again, in terms of the transparency of the procedural steps and the timeline, it would be great to have a little bit more information, because the internal market has such an important internal dimension, and there are so many people from outside Europe that are looking inside Europe. The way that we are organized today, which has been maybe a little bit more ad hoc, looks messy. Now, Martin Merlin told me equivalence, is like democracy. It's messy, but it's the best system we have so far. I tend to agree with him, but I still think we could take a step forward and maybe, have some sort of like guidelines that the Commission would follow. I would call them equivalent assessment guidelines, that whenever a proposal comes along, the guy who is writing them sort of like follows a logical equivalence deployment. And then last but not least, at level 2, what we see is that the ESAs are not equipped today in terms of the resources to deal with the impact, the extraterritorial impact of some of the legislation. I think we need to look at the resources of ESA, because otherwise we will not get good process, good timelines, and good decisions. Again, ESA should be given clear guidelines on the equivalence assessment in terms of the criteria, and also very strongly the dialogues between third countries and the ESAs are very, very important in terms of making sure that the third country, which is not in line, actually understands where it needs to go, in what direction it needs to move. And then I think the last step, once the equivalence advice comes back from the ESAs to the Commission, you know that today we have two different processes. One is the regulatory technical standards, and the other one is the implementing standards. Again, I think it would help if there was a little bit more clarity on the processes. I think if you're really good, you end up knowing what exactly is happening, but you need to have good lawyers. You need to have a smart mind to see where things are moving. Again, I think we could make a little bit more progress in terms of the processes once the regulatory technical standards come back and the timelines. I think this would be good in terms, as I said, the investment, and also to make Europe look less messy and more attractive for foreigners interested in investing in Europe. Thanks a lot.